Ladies and gentlemen of the crypto space, we're live on a Wednesday, October 30th at 12:02 p.m. Couple of thoughts on my mind heading into this week. Obviously, we're at a Wednesday already, but yesterday was quite interesting from a Bitcoin price action standpoint. And I wanted to remind folks about things that I think about heading into what is likely a bullish period for the crypto market as a whole. I find my greatest confidence, my greatest comfort in my conviction to be a contrarian. I literally want to think the opposite of the way everyone thinks. I want to be myself. I want to be different. And that is something that take great pride in. Conviction to be the contrarian. It's really the title of today's stream, and I might as well elaborate a little bit before we look at some chart data and talk about other topics. There's no certainty to outperform. Everyone wants to make the most money possible, and they get upset that they can't sell the Pico top and buy the Pico. And that ultimately means the most important thing that should be obvious. It's irrelevant. Well, it's not comparing your performance to the most perfect performance possible is irrational. What matters is being rational and making good choices, decent choices, spending less than you make, investing rather than not investing, making an educated choice rather than a gamble, at least more often than less. These things matter. Trying matters. So that's what counts. And there are considerations with regard to compound average growth rate, which I could pull up my ChatGPT conversation. And I will probably do that after I finish describing these words here. Bitcoin collateral and how they are and will be used to create currency. Okay, so this is important. So Bitcoin's important, and it's not important as a currency. It makes no sense as a currency because no country will use it as a currency because every country wants to create their own currency. But they sure as hell will use it as a collateral. And if they're using it as a currency, like Salvador, for instance, I don't think that's where it's going to be in the future because it's too freaking valuable. They'll realize we could let people use it to settle transactions, but that's only because this is early stage. Late stage, you want to hoard these types of relatively um, scarce assets. No one's going to use gold as a currency. No one's going to use Bitcoin as a currency. The nation states will hoard it and print their own currency and back it with this type of currency arrangement. So that's the way countries work. That's the way humans work. So it's very important to understand these realities of humanity. Just as a type of system in which we exist. Understand the system. So understand now versus where we're heading versus a decent time horizon into the future of where things will be. And we speculate on the future. Frankly, I expect to live in a world of where Bitcoin is collateral. I don't expect to live in a world where Bitcoin is a currency. It doesn't make sense as a currency when you understand humans are pretty weak and they're gonna do what humans always do. Um, because that's what governments and people always do. Okay, so if we understand that Bitcoin, the way Bitcoin maximalists talk about it, are absolutely correct. How do we compare that to investing? 'Cause I don't personally like to consider Bitcoin an investment. I like to think of it as more of a money, not a cash, but a money. It's just how I define it. Something that's collateralizable. Okay, so we want to invest also, but maybe the money outperforms investments. I still don't define it as an investment. So what's the CAGR? CAGR, compound average growth rate, is a common denominator between the value of things or the delta in value of things. So you have the change in value of Bitcoin over time and the change in value of investments over time. So, it's important to accept reality. For instance, if You invested in a whole lot of memes in 2021 and everything went to zero in 2022, or you invested in a whole lot of memes in January of 2024 and you turned 100 grand into 5 grand and you lost everything. Maybe you're pretty bad at investing. But that's not really investing, that's gambling. Maybe you're pretty bad at gambling. And in hindsight, the better opportunity would have been just buying Bitcoin. And Bitcoin has had an 80% CAGR from 2019, the lows, 3,000 and change, especially Pico low, March of 2020, to the current price. It's an 80% CAGR, at least in this type of analysis. And you would need, in order to outperform Bitcoin, you would have need to turn $100,000 in 2019 into $1.5 million right now. And that still wouldn't have outperformed Bitcoin. So take that into account with regard to making decent decisions with regard to investing. It's just very important to understand these types of realities. So um, now, generally, the expectation for the CAGR of Bitcoin is diminishing returns. I don't expect an 80% CAGR heading into 2030. So you could probably take like a 30 to 60% CAGR heading into 2030, and that would be pretty wild. So let's 45%. So let's say Bitcoin was an 80% CAGR, and 100,000 to 1.5 mil in 2024 is a 71.8. So those 80% produced 1.5 mil from 100 grand in 2024. So let's say 45%, uh, 1.5 mil in 2024 at a 45% CAGR heading into 2030 is how much? So let's ask a very simple question. It's just an equation, and I like the conversational way of doing it rather than just start waiting back and forth. So that's a lot of capital at a 45% CAGR. Maybe Bitcoin's even at a lower CAGR. So you had your 1.5 currently, 1.5 mil currently at a 30% CAGR heading into 2030, like 8, 7, 7.24. So Bitcoin grows at a 30% CAGR, and you have 1.5 mil in 2024. You got 7.24 mil in 2030. If Bitcoin grows at a 45% CAGR, you got 13.94 mil in 2030. Now you can only imagine what the folks that currently have 100 mil in Bitcoin and Sailor. It's just could be weird at these kinds of CAGRs. 30% CAGR, for what it's worth, is Stan Druckenmiller, and that's the best of the best. Some of the few people have larger CAGRs, more the active and the quant type investors. I've heard some numbers, some extraordinary numbers, like 60% CAGR for many years. But few are going to outperform even Bitcoin between 2019 and 2024 at about an 80% CAGR. What an extraordinary return. So, my expectation or my speculation is that, especially going forward, technology will outperform Bitcoin. Um, in my experience, um, well, these numbers aren't specific to my accounting. I am sitting at around a 70% CAGR. So I have underperformed Bitcoin relative to, froth, the peak, Pico bottom to Pico top, an 80% CAGR. And that is something that I understand because I'm literally digging into the math as I'm showing you, trying to tell this little story. And I think going forward, this is the appropriate path because of everything that we discuss and how I tell you and try and tell the story of how the system actually works. So it's imperative to have this kind of exposure, this kind of fintech exposure, and the amount of Bitcoin that you have as a result of this exposure is what counts. It's not having like if you've ever heard the conversations from Bitcoin folks, they're so far off from understanding how the system works. And they understand how Bitcoin works and Bitcoin price go up. So that's cool. They understand debasement, but they don't understand how long it's going to take to debase. They don't understand how to create a functioning economic system and how governments will attempt to create functioning economic systems, whether they're good or bad. That's what they do. And more often, and historically, it's clearly the case, they produce systems that end in failure. That's irrelevant. That's what they're going to do. They're going to create the system. What kind of systems are they going to create? They're not going to create some utopian system, the Marxism that works great on paper, but clearly is a natural disaster in the real world. And or the Bitcoin standard where everyone's working in sats. Just no. There's no unicorn land of a Happy Gilmore, Happy Place type of system that will be created by governments. They will use the foundational components of the systems that they have created over history, which is at this point collateral, currency, double entry accounting, credit. What they're going to use, that's what they're going to build. So my expectation into the future, especially as Bitcoin is getting to these critical prices, I expect diminishing returns, and I expect tech to start to significantly outperform Bitcoin appreciation. Look at the numbers. If Bitcoin's a portfolio of 1.5 mil now turns into 14 mil in 2030. That's still extraordinary. So you don't need to significantly outperform a 45% CAGR. Oh my God, a 45% CAGR kind of changes everything. If you are 50 years old and and you take and you have a decently sized amount of investments and savings and you properly structure it, the exposure to Bitcoin at a 45% CAGR changes everything. And you don't need to necessarily outperform. What you need to be is comfortable. And what you need to be is confident in being different. And that is what I find comfort in being. So I take that speculation that tech will outperform a 45% CAGR on Bitcoin. Folks have been stating, and what I have heard is the speculation that Bitcoin will be at a 30% CAGR heading into 2030. And that's something that doesn't exist in traditional finance. That's an insane number. But what do I know? I want to look something up. I want to look up the Wayback Machine, and I want to look up coin market cap in 2021. Ooh, old, stiff neck. And I want to look back in 2021 here. I'll go to November 2021. Okay, not, how do we go? Huh. Oh, is it working? I want to go to November 2021. Okay, October 2021 counts. Tell me it's loading. Oh, I want the top 100. There you go. I was a little off of statements I've said double digit billion, but look, double digit billion was 21. Top 20 of the top 100 crypto was the double digit billions, and the top 100 was all a billion plus. That's what I remember from 2021. So, with regard to where things could speculatively head, uh, I think a lot of things, a fair amount of things, are going to do better than uh, probably even an 80% CAGR heading into 2028. And then like 2032 would be the next cycle. 2030 is just the end of the decade, but you got 4, 8, 12 years to think about from an economic or rather a debt refinancing cycle perspective. So I think a fair amount of things do beat that 80%, not even just the 45 or 30%. I think many things do beat Bitcoin's appreciation, and that is going to be quite interesting. One bill, come on, what do you think? Where do you think this cycle ends? Double digit bill on top 100. And then what happens when in 2028, heading into 2032, everything is 100 bill plus? And that is something that I think is quite reasonable. 2032, everything's at 100 bill in top 100. I mean, what's 100? What is what is considered large cap in stocks? So large cap is 10 bill plus, mid cap is 2 to 10. So, all right, top 100, how many crypto are there? So this is what do you think about the composition of what crypto could potentially be in 2032? 100 large caps and, 500 mid caps and 10,000 small caps. So look at these capitalizations. And where are we right now? Right now, everything is you only have two large caps now. Let's we could look at CoinGecko and see what's the composition. So you have three large caps. Tether's considered a large. That's volume. I'm sorry. Uh, you have a fair amount of large caps. Large caps coming in at 10 bill or more, according to uh, uh, standard terminology. So you have 16 large caps. All right. So how long does it take to get to 100 large caps? And that means there's 80, 84 um, from 800 mil up to 10 bill. All right, some there's a mix between mid and small cap in the top 100. So when is the top 100 all mid cap, large cap? Is it 28 or 32? And those are some multiples right there. Because if a 30 mil market cap asset gets monetized to be a mid cap, 30 mil to 30 bill, 1000x. 300 mil to 300 bill. I mean, there's only a couple of 300 bills out there. It's really just Ethereum, 322. I think there will be many more, and it won't be just stable coins. Be actually fintech companies. Take another 4, 8, 12 years. I don't know about 12, maybe 4, 8, 2028, 2032, and you're going to have big fintech running on deterministic software. And that's just going to be weird. That's like the whole post 2030 thing that Raul talks about. You don't really have a clarity of where things are going to be. So you got like 6 years left to figure shit out. Um, where's people in finance? Why are humans involved in banking? They shouldn't be. They cause more. They cause the problems. They literally create the problems. So if you get software is running banking and humans are banned from banking, there goes the fraud. Right? Unless now you're talking about a fraud of fraudulently expressing yourself as a machine rather than a human. So the human has a false identity. Oh dear, it gets dark. It's very dark where things are probably heading. If you're on X or if you're on YouTube, please feel welcome to post any comments or questions. More than happy to talk about anything on your folks' minds. Uh, Bitcoin was up at about 73 and change, 73.2, 73.3 yesterday. Sitting at 71,891. I'm looking at the weekly perspective, and clearly that is a very nice breakout. That is a breakout, a retest on a weekly candle, and wick below trend resistance, flipping support, and then the higher high. So this, by definition, from a weekly candle perspective, is this trifecta of bullish confluence. That's very nice to see. It could easily turn into a fake down breakdown. So you break out, but then it ultimately breaks down. So those types of scenarios do easily occur, um, historically occur. And this is a bit of a double top expression when zoomed out. And clearly, when you zoom in, you see that we kind of got pretty darn close from a candle body close perspective on the weekly. So we got the 73,566 and 73,782 was the wick, wasn't a candle body close. Excuse me. It was about 200 and change from the wick on the high set in March of 24. I think we could easily see some downward price action back to some moving averages. I mean, at least to the 4 hour, like a time weighted average price. I don't think we're going back to 68, but why can't we go back to 71? A nice confluence on the 1 hour, the 4 hour. I don't think we're going back there. I don't think we're going to get. That was the higher high. That's clearly a higher high compared to last month, or I'm sorry, um, last week. But from a daily chart perspective, time weighted average price does bring us back down to 70, and that would be, frankly, a higher low. That's clearly a higher low on a daily, and that'd be a higher high in a daily, and this would be a higher low in a daily. So that would still be quite a constructive chart, and depends on what kind of volatility is in play there. Does look like a bit of a hanging man, which is following, not really. There's a nice wick at the top there. So 7 hours left in the daily candle. This is why I can't look at daily charts. It drives me nuts. It's a big breakout from a weekly perspective, and this is really like you need second week of November. We need two more candles here, and we could have a little bit more confidence in how we talk about where things are heading into the rest of November, certainly, and probably a better perspective on where things are heading into the end of the year. Like for instance, if we close at right now, 71,930 as resistance. We had some nice resistance back here in June, but bear in mind, those were wicks. That wasn't a candle body close. For instance, if you close right here, right now, this is an all time high weekly candle body close. Food for thought. And to me, that is quite constructive. You realize that? If it closed right here, right now, this would be the all time high candle body close for Bitcoin, even considering obviously 2021. Leandra's in the house. Good morning. Raul, IMDC. Hey, Cap, going through my taxes and realized I should have just held BTC. Now, that is a statement that probably most folks will come to see as the conclusion. It's few. It's few that will outperform such large CAGRs. I mean, 80% is an unheard of CAGR. Um, Frankly, if tapioca still had its valuation, I would be a little bit above 80%. I'd probably be at about 84% CAGR. Clearly, with significantly less Bitcoin. So that's my perspective. Now, I find myself quite fortunate to be in that scenario where I had X amount of Bitcoin back in 2019, and I monetized it or I used it, consumed it, and I had this whole experience with um, with the fintech of the crypto space. And I'm going to end in 2024 with less Bitcoin, but this whole knowledge base of how finance actually works. And I'm thinking to myself, is it better to have the Bitcoin and the more net worth versus less Bitcoin and all this knowledge of how fintech actually works? And only hindsight would be able to answer that question. So check back in 10 years type shit. Because if you just have Bitcoin, you still need an understanding of how to collateralize it, how to, like what Michael Saylor talks about. But Michael Saylor doesn't even talk about what it would be like for, um, you know, a moderately wealthy person, a person that has $1 to $5 million worth of Bitcoin, like in 2030, because he's got a business with a huge amount of cash flow. That's what folks don't understand, and that's what I understand because of what we've come to learn about how financials actually work. Look at MicroStrategy. He's got a giant business of cash flow. There's cash flow. You need cash flow and cash. Investments and cash. Investments and cash. And cash consists of money like or assets with properties of money, Bitcoin, Ethereum, collateral, things that can be collateralized. So if you just have money, you don't have a well-structured portfolio. So, do I wish that I had the amount of Bitcoin that I had in 2024? Sure. Would it be better or worse to have that Bitcoin or the education now? I think I can only answer that in hindsight, but it's likely the case that finance, as nation states create it, will continue through the entirety of my lifetime. So I think this education was imperative. And the only thing that could be said was I was fortunate to make rational choices such that I was able to relatively achieve the same CAGR as Bitcoin. So I would not have benefited from a total net worth perspective of just holding Bitcoin. So the education you get, which can be considered an expense or things you have expensed to acquire the education. And I think it's just the wrong thing to say, IMDC, that should have just held. All right, fine, from a tax perspective. Oh, goodness, but we've talked a lot over the last 2 years about tax management, capital management. So it does get more complicated than that because there's ways to manage the process of investing in cash flow in a tax efficient way through varying structures that are widely available in different states in the United States, which is actually quite an interesting reality. It depends on the state that you live in and the rules of the state. Different states have different rules. You know, a lot of the things that we encounter are just right in front of us. Like look how corporations incorporate in Delaware. Why do they do that? And they're not doing that anymore. Elon Musk did not like that Delaware corporation. Uh, Clearly, Delaware likes it because then they're managing the capital and the taxes and whatnot. But you could be in any state and incorporate in any state, even though you do not operate out of a particular state. So that's a weird one. But you could you could do things like that, but it's relatively straightforward to incorporate or operate a trust in a state in which you actually live or are operating the business. And in doing so, there's more structure to the argument that it's um, a well built entity. When you have a multi-billion-dollar business, you could probably finagle. Okay, I'm going to create a corporation in another state, even though I'm not operating in that state. So you have some leverage and there's reason to structure. But that's the point, structure. You can't structure your way around a lot of these complexities. Um, Anyway, it's a bit of a digression, IMDC. But yes, in hindsight, that's the only way we can make that kind of observation. And if that is your hindsight observation, um, it is what it is. You can only move forward. and you really need to try as best as possible to not regret the past. Learn from our mistakes and make better choices going forward. We'll be here to talk about it, to cope about it, maybe, but still talk about it no less. Sergio present. I am DC. The lessons and understanding has been priceless. Well, that's all we can do as humans. Just get a little bit better, do things a little bit better, make different choices, learn something new that we didn't know, learn how the wealthy manage capital, for instance. Not that that really helps us unless there's an opportunity to. I don't know. It's not simple. Not simple what they do. They have excess resources, and they're man. I'm just thinking about the capacity of the wealthy to hire attorneys and do all that paperwork versus doing it oneself. Dear Lord, that's been a very complicated process. BTC ain't playing. You weekly cap. Fuck you, pay me. Yeah, Bitcoin is doing very well. Albeit, look at Ethereum outperforming 1.66%. ETH BTC looks like absolute garbage. Bitcoin dominance broke through 60%. Maybe Bitcoin dominance is at a top because structurally, from a rising wedge standpoint, that does look like a very nice top. We are past the um, the lower. We're past trend line, the descending trend line. Albeit this is on a log chart, on a dominance chart. So I don't really know the significance of that conceptually, other than that is what it literally says in chart form. But this could be a rejection from a technical standpoint. It would look good. It would make sense. And a lot of charting is, does it look good? There's a lot of symmetry in chart data, and that's what a lot of these patterns ultimately represent. Um, in the end, we'll see what Bitcoin does. And generally, my expectation is stuff other than Bitcoin significantly monetizes. I mean, what's the general consensus is how many dollars are going to be in the crypto markets? And that is probably the most interesting thing that I like to think about. And when we mean dollars, we're talking about stable coins and what kinds of stable coins. Now that takes an understanding of how global financials works. Exogenous capital inflows, USDC, USDT, or endogenous printed credit currency, which is the more interesting one, in my opinion. Anywho, seeking wisdom, if the DXY breaks down and enters a multi-year downtrend, would that automatically make all emerging markets more attractive for investment? Yes, that is the way it works. Now, bear in mind, the DXY does not organically break down. DXY comes down because of agreements between countries, whether it's agreements between China, Japan, China, Russia, China, Saudi Arabia, but pretty much China and someone else. Um, but with their fiscal situation and their need to stimulate the economy to prevent just outright deflationary collapse, it's going to be pretty difficult to see the dollar come down unless there's some serious international agreements, especially between the United States and China. China don't have swap lines. Um, so but the U.S. Also doesn't want them to unload a half a trill or a trill worth of whatever the hell is sitting on their books in U.S. debt because of our fiscal situation in the U.S. Had literally just cut rates, and the long end is going up, and mortgage rates are up. That's crazy. There's a whole lot of shit going on, a whole lot of moving pieces to this puzzle, and the dollar just doesn't automatically go down. But I mean, at some point, um, the powers that be probably collude and come to the conclusion that the dollar really needs to come down for everyone's respective geopolitical interests to actually be reasonable to execute. Like if the US wants to repatriate supply chain, that dollar needs to come down significantly. Otherwise, we're not an export nation, we're an import nation. When the dollar is expensive, it favors importing shit. And that is literally contrary to what everyone sees as the writing on the wall of deglobalization efforts around the planet. So, but that is exactly the relationship. As the dollar becomes weaker, foreign currencies become stronger. Therefore, foreign currencies have more purchasing power and they're able to monetize things differently. And that's how you get the emerging market cycle. Now, bear in mind, we haven't had a relatively strong emerging market cycle since 2008. 2001 to 2008 was a big devaluing of the dollar process. I wish I knew a little bit more about financial history from a like Lynn Alden perspective, without like the Bitcoin bias, to understand uh, what this type of world between 2001 and 2008 would create in these in more current times. How did they devalue and why did they devalue the dollar so much between '01 and '08? And clearly, we know of the housing boom that occurred. Great financial crisis culminated in 2008 as a result of this relative weakening of dollar currency units. So it wasn't the same degree of monetization that we've. So probably one of the biggest takeaways right here. Everyone's so salty about the U.S. They're like, oh, all they do is print dollars. Oh, look at the M2. The M2 is vertical. It's straight up and vertical. Yeah, look at the dollar. They printed all of that money, and the dollar is just boom, straight up over the last 16 years since 2008, straight up. So that's what folks. That's why it's so important to understand the way this world works. So you're not just sitting around salty like, oh, when the U.S. dollar ends, the end of the dollar and the BRICS currency units. No end of the dollar anytime soon. Because if they needed the dollar to end, foreign currency fails first, and that and the dollar's end is with the dollar at 200, 300, 400 on this chart. That's the end of the dollar. 'Cause everyone has debts, and those debts need to paid off, and those debts require dollars, and there isn't enough dollars existing on the planet to pay off all the debts. That's the weird one that folks don't understand. The end of the dollar is nigh. Hmm. Soon. Soon, TM. Yeah, Leandro, many do not understand that in some ways the dollar is scarcer than Bitcoin. The dollar is potentially, you have to do the calculations, but it's quite a reasonable statement because despite the issuance of Bitcoin being smaller, the supply is not elastic. And also the amount of debt that's been created based on the dollar. So the demand, that's scarcer, but the demand is so incredibly strong for the dollar because people need to acquire it to pay their debts. Like all that, Japan's issuing dollars based on pooled collateral. What is that? They're creating dollars using collateral deposits and they're creating dollar liabilities, which are euro dollars that banks accept around the world as dollars. That's what those types of announcements mean. Uh, and pooled collateral. Let's see if it just pulls up. Uh, Yeah. Bank of Japan to provide U.S. funds against pooled collateral. It's so important to understand these types of headlines. And it's interesting that who comes up when I write Japan pool collateral? It's literally Jeff. Jeff is one of the few that understands this whole mechanic. It's always bearish. That's why it's so hard to listen to him, because the whole system is always bearish, always doom and gloom. The whole system is always ready to implode, but it doesn't because of collusion and interventions and various policies and facilities. but it's always ready to implode in on itself. So you might as well understand how it's always ready to implode in on itself, and you might as well understand the world in which you exist, not the world in which you want to exist, where the dollar implodes and miraculously the only thing left with value is Bitcoin. So let's not delude ourselves and let's be rational. You don't have to have as much Bitcoin as possible because there's an emotion. Oh, I had, like what? I had back in 16, 17, I think I had in the 50s, maybe 100 Bitcoin back in 16, 17. That wasn't much money compared to now. What at $290. If you had 100 Bitcoin, you had 20 grand worth of Bitcoin, and it went to 590, and you turned. All right, so you have less Bitcoin now. You regret having less Bitcoin? Don't regret things. The emotions that we feel and think as humans, they're informative, but they really are only a component of the equation. Don't let these emotions make you think you either did things wrong or you did things right. I like to think what's most important? It's good choices. Choices with explanation, choices with meaning. That's why I always talk about rationality. There's plenty of rational reasons why less Bitcoin and all this education and understanding how economics works is a good choice. It's a rational choice. But just remember that. I mean, look how many folks are so light stream today, 88 people on the stream. And that's obviously folks that haven't retweeted, but that's okay. But the point is, look how few folks are even interested in being rational, thinking about investing rationally, that find my content by knowing how I talk about rationality. So literally, you 88 folks are part of the few, such a small few that even try to look at these markets differently. Just unto itself is an achievement because everyone's out there running around looking at all this shit identically, the same. Oh, the meme coins, super cycle. Everyone's so desperate with their meme coins. They're gonna monetize, and you hear horror stories, people losing everything. That's an interesting. Maybe I should. What are the names of the X handles? I forget them, but they where people tell their horror stories where they've lost everything, and then the guy who does well at meme coins is like, "That's a skill issue." No, motherfucker, that's not a skill issue. It's exactly what meme coins are designed to do. They're designed to transfer the capital of the many to the few, which is exactly what stocks are supposed to do. This is exactly what trading does of anything. Doesn't matter. Just with meme coins, it does it faster. So, anywho, I'd be rational. It's so important. So, in a credit crisis, the supply of dollars evaporates. Exactly. While the supply of Bitcoin remains the same. Yes. Um, which means if the supply of Bitcoin is not contracting, that means there's a relative increase in supply. Oh, non-elastic currency have downfall. That is a very nice observation right there. So that's why when you have a deflationary bust and something's blowing up, um, you see all of a sudden that the relative inelasticity of Bitcoin is a negative with regard to value. And people will talk about it in terms of, oh yeah, you'll sell anything and everything in order to prevent liquidation. Or yeah, of course, you sell the kitchen sink. That's why stock market rolls over when there's deflation and you have deflationary cascades and credit is getting margin called and whatnot. You sell anything you can. including Bitcoin, to prevent the liquidation. But that's an interesting reality. When the supply of dollars evaporates, Bitcoin can't contract. Um, there you go. Relative increasing supply. That's why the volatility, and that's why the dollar collapses and appreciates at the same time. Yeah, dollar's another story. Dollar's just a That's exactly why when you look at this chart, and everyone's like, "Oh, the dollars, they just printed 80% of all dollars in existence over the last 4 years." The dollar has been up only since 2008. That's Nobody seems to get that. Um, let's go out to the yearly chart and let's turn off everything, including, right, let's turn off, there you go. This is the dollar. Um, not the time weighted average price. I mean, technically from, let's say even from 16, because this is a yearly chart, and this is the time weighted. So this is the core moving average of this yearly chart. Crazy thought. And the dollar is straight up in value since 2016. Through the 2020, they've printed so many dollars. So you know why the dollar is straight up? Because other countries print way more, and they fucked up their currencies way more. That they have allowed the U.S. to print so much that it makes us look like we're pretty good at managing currency. So that's the point. That's why you need to understand all this shit to understand holistically the kind of world we exist in with regard to the financials. Adam, my friend, with Bitcoin still outperforming Ethereum and past discussions about DeFi as a leverage Ethereum bet, I'm wondering if it makes sense to move some ETH into Bitcoin, or maybe this would be the worst time for that. So this comes back to the way I've been talking over the last maybe 6 months to a year about cash and investments. They're distinct. Investments should produce cash flow. Investments will be exposed to Bitcoin beta, Ethereum beta. We're talking about crypto investments that produce weekly cash flow. So you already have inherent exposure, beta exposure, and we've seen the downside to that. You get the multiple down just as like you'll get the multiples up. And then the whole point of the last 2 years of our stream has been getting a well-constructed portfolio, which is literally what MicroStrategy is. MicroStrategy is literally cash and cash flow. The business that has cash, that's literally Bitcoin and dollars. It's what I talk about all the time here. Cash is your stable coins and your Bitcoin and your Ethereum and collateralizable instruments. They choose Bitcoin. That's great. And their investments that produce cash flow, which is a business. Their products and services that and all that cash that it generates. So yes, I would strongly encourage that a well-structured portfolio contains cash and preferably some sort of reasonable balance between uh, currency liabilities, stable coins, and collateralizable cash. And Bitcoin has done much better than Ethereum. And I would say even if Solana outperformed the shit out of Bitcoin of late, going from $8 to whatever the hell it's at nowadays, I think Bitcoin is important to still own because it's Bitcoin. Now, that's obviously a pretty shitty reason to own something, but it's real. It was the first, and that's meaningful. So Bitcoin is Bitcoin. So it's important to have some Bitcoin, even though we speculate, not you specifically, Adam, but we generally do, that Bitcoin will underperform many things. And that's okay. It's okay to underperform. If you need to say it to, I'm not speaking to just you when I say this, Adam. I'm just answering your question. If you need to talk to yourself in the mirror, this is kind of like what I'm doing now because I see myself as I'm talking. Do it. Say to yourself, it's okay to underperform. It's okay. It's okay not to sell the top. All right. What matters is being calm and being rational and making good choices. So, some F into BTC. So, for instance, I don't really have much Ethereum exposure, but I have Ethereum beta exposure. Clearly, if Ethereum does well, everything in the crypto space is going to be doing well. It's important to have Bitcoin as well, and it should be cold. Have some cold Bitcoin, cold storage, like a hardware device where a seed phrase hasn't touched the computer. Some Bitcoin. Maybe you have it in the brokerage account too. That's okay. That's okay. And maybe you have some on Ethereum mainnet or whatever, an EVM. Are you using WBTC, TBTC, EBTC? So that's cool too, but it should be some actual real Bitcoin. And we pick our sizes, just like we talk a lot about position size. This is about portfolio composition. What size of actual real BTC versus what size of Fidelity Bitcoin versus TBTC that's collateralized on, well, here they accept WBTC on DeFi Money, which I posted about this morning. Heck of a protocol. I really love this user interface so much lately. So simple. So simple. Collateral print money, collateral print money. I mean, this is literally like CRV USD, just like condensed into such a lovely presentation, in my opinion. But they all take WBTC, so that's why you could put Bitcoin here and access the equity. You're not accessing the equity of Bitcoin on a cold storage wallet relatively easily without, I don't know, bullshit hoops that they keep talking about in the Bitcoin community. Like you're not collateralizing Bitcoin without transferring the UTXOs off your wallet. You're not. It just doesn't make any sense. So that's why the EVM contracts are so meaningful because you can have this deterministic immutable contract and I transfer assets to it. And because that contract is deterministic and immutable, it has a degree of trust. Therefore, the only person that could transfer my assets out of that contract are me. So that's what's an example of that? It's like an Aave. So that's what crypto's all about is degrees of trust. You're not doing anything like this with cold Bitcoin. It doesn't you could do computation, but you're not doing anything like that. Just doesn't even compute from a conceptual standpoint, considering the way the stack works. I mean, all UTXOs do is execute a stack of operations. They want that opcat, which is a concatenation operation. 'Cause that is a significant calculation or computation with regard to how stack executes. Um, it changes a lot. I don't know why they removed that. Now they're arguing to put it back in anyway. So can't do anything like that on Bitcoin mainnet. Anywho, I digress. I digress. It might be the worst time, Adam. When you're thinking like that, I'm going to sell my ETH and buy Bitcoin because then Bitcoin dominance is at 60%. Now is probably the time to do nothing. I think to myself that more and more. Now is probably the time to do nothing. So literally, I'm doing very little. I'm waiting for some S money to unlock because this thing was up at like 60% at one point a week or two ago. I'm going to take that S money. I'm going to get this leveraged Ethereum. It's like 6 Ethereum. I'm going to take this, and I'm thinking maybe I put it on AWA and get some points here. Or maybe I don't even need that. Maybe I just like AWA and I don't need to have minimal exposure. Why do I say that? Because my thought process is maybe I'm better off here because whatever DeFi money is up to, I find it very interesting that they're offering points for VECRV, of which I clearly have a fair amount. And that means I have better bang for my buck and potentially having reasonable exposure to whatever the hell they're building. Now, I like to speculate forward looking. What are they building? Clearly, it's just derivative of CRVUSD, multiple collateral types. And how strategic is it? What's the relationship with Curve? Is what the synergy is clearly there. What does it all mean? So I think I was very hesitant on DeFi money at first when they first came out. It's been out about 3 4 months. But man, this thing has grown on me. This user interface is now they have the monitor. Oh my god. Oh my god. I love this user interface. I mean, it's when you understand what the data means, it's really simple and straightforward. Having trouble with traction on base, the interest rates are so high because 0.995 uh, peg deviation to the downside. That's the whole point. How do you get how do you get this flywheel going in the right direction where you get more collateral? We'll see. That's why I think the points could potentially be interesting, and is at some point they'll do a TGE and a bootstrap and some sort of issuance, and I don't know. So maybe I just take that ETH. Maybe I just take that the money that unlocks, and I'll split it in half between CRV USD and money and throw. That's not a bad idea. That is not a bad idea at all. Anywho, less is more right now. I encourage folks to do less rather than more. Uh, Baskedat, Cap, what crypto sectors are you most bullish on for the next bull market? Um, Pretty clear that I think well, folks have literally said they expect $1 trillion by 2026. I mean, that's TradFi spec, what's happening. So when I hear things like that, and I understand what a dollar is, what credit is, and bullish on dollars, I I think I'm going to outperform the shit out of 30 and 45% CAGR on the concept of dollars in crypto. Because dollars are ultimately the biggest business on the planet. If someone tried to tell me that in 2020, I would have looked at them cross-eyed. Biggest business on the damn planet. Dollars are bigger than government taxes. Taxes are an incentive system, by the way. And so is I mean, all money is really part of an incentive system. Find the incentive, and I'll tell you where money's going to flow. It's a derivative of something Charlie Munger once said. So I'm most bullish on credit and dollar liabilities. Two variations, similar. Dollar liabilities are a form of credit, but for instance, credit is like a this type of product. We're able to deposit even dollars because you could borrow against USDC, but you deposit collateral and you're able to access credit based on that collateral. That's credit. But dollar liabilities are Go. Go, for instance, Go is printed. Since someone did not deposit Go for it to be borrowed, Go is created by the protocol. But CRVUSD, is clearly a dollar liability form of credit. So I don't like using the word bullish. This is the tech, the fintech that is the most interesting in the crypto space because there's only so much. You have foreign exchange, which are the AMMs. You have credit, derivatives, dollar liabilities, and liquidity financing, the five businesses of crypto. $62 million, which is relatively small. Million. And there's 80 something billion dollars on Ethereum mainnet. Let me go over here. Nope. Analytics. You go to the llama when we want to understand what the hell is going on. Let me explain something very simple to you. You go to Ethereum and you see $84 billion. Why are those $84 billion not on base? Seems like a simple question. Why aren't they there? So they're not there. That's an answer. Why aren't they there? Maybe it's an open-ended question, but they're not there. They're not on Solana. They're not on Arbitrum. They're not on Binance Smart Chain. Frankly, they're on Tron. There's $60 billion here. Clearly more on Ethereum mainnet. But why are the dollars there? What are they doing? And that's frankly the $1 trillion question heading into 2026. What are the dollars doing? What will they be doing? How did the dollars get there? How will new dollars get there? From outside the market or from within the market? There's your question. And that'll tell you what sectors will be most bullish for the next bull market. Follow the dollars. So I'm most bullish on things that print dollars. I want to own the dollar printing machine. And it's not the Fed. The Fed has produced very few dollars. The US government has produced very few dollars. I think that's a story I've tried to tell over the years, but sometimes I remind folks the vast majority of the dollars on the planet were not produced by the Federal Reserve nor the United States government. The vast majority of the dollars were produced outside of the United States, not by the United States. Understand that. Understand global finance. Understand that. Understand fintech and potentially opportunistic fintech businesses and products to invest in. Christoph, other than Tapioca, do you have any other omni-chain protocols on your radar? Oh man, Tapioca, could you? I hope they figure shit out because that was a nice hit right there. But I think I'm still optimistic. I think it's going to be fine. What Abracadabra's omni-chain also? Who else has the OFT implementation? I should look that up. Who did the OFT implementation with layer zero? But Abracadabra's mem has it. Oh, oh. Oh! Who has the OFT implementation on dollars? Money. Oh, yeah. So by the way, you see this bridge right here? This is layer zero. Money goes from Arbitrum to Optimism, and it's not 2 minutes. It's literally like seconds. And it's not like a Stargate transaction. It's not an across transaction, a layer swap. It's not in any kind of bridge transaction. This is a mint and burn. Boom, 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 boom. OFT, Omni-Chain Fungible Token. So a little protocol, if you understand a couple $1 million in deposits, a couple mil in liabilities, has layer zero omni-chain fungibility, has you know, liquidation protection, CRV-USD implementation, has the pancake concept because it is the CRV-USD implementation. Where the opportunity is with regard to investment, there is no investment opportunity. Nothing to buy. So it's just participate in the protocol and get points. Okay, I'll do that. This happens to be the thing I think is most interesting right now, other than AWA, which happens to be built on Curve also, except that's built on like the AMMs. So it's cross chain, seamless cross chain liquidity. I love the bridges. So of the bridges, what are my favorite bridges? Stargate, um, Layer Zero product for cross chain messaging, AWA. I like Layer Swap. I do like Across. I like what Uniswap's doing. Nothing to invest in there. I don't see any investment opportunities other than maybe Stargate. Stargate has underperformed and has done piss poor from an investment standpoint. So that's certainly not something I advocate for or encourage. Other than that's the kind of risk exposure someone wants. I do like it. Not too into a cross from an investment standpoint. And but A was very interesting because its use of Phantom as the liquidity hub. So between this DeFi money and AWA, those are the two most interesting fintech products I see right now. So might as well get as many points as possible. That's about that. That helps. Soon. Good morning. Hope you're well. Always a pleasure. Take a look at volume. Let's see how base is doing today. Base has been on fire. Fire. Ooh, God, do you have any idea? The aerodromes posts are going to be unsufferable. The fees are it's going to be absolutely disgusting. But they're going to blow out another week. Aerodrome, it's insane. It's not base. You know how I know it's not base? You go over here. You go over to stables. There's literally, if you go over to base, it's all USDC. Literally, there's nothing on base except it's base. It's literally Coinbase's operations. Um, there's almost no financial activity. You do have Moonwell. Um, I want to go over to DeFi. Let's take a look at base real quick though. But I want to look at markets. If it loads, I think it was like 60 mil. If you have like 60 mil in deposits here, and you're talking about like 3.4 bill of USDC and no endogenous stablecoins at all. It's literally 60 mil in this credit market, which is big. So, it's good for a nice little micro mini company. So, Moonwell, it's basically a compound V2 fork. It's not really investable in that regard. There's just very, there's very little financial activity on base. Let's go back and let's see what else is going on. I want to look at chains and I want to look at base. Yeah. I like Beefy more and more over the years. Been thinking about where to deploy stables, but Beefy I think might be the place. Beefy has done so well over the years. There's literally nothing on base. There's nothing here. Fascinating that Moonwell has done so well considering Aave is deployed here also. Aave is deployed on base. If you go over here, there's base. So what the fuck? Depositing on Moonwell compared to Aave. I mean, it's like what Mark Zeller says. It's like just use Aave. I mean, this is literally the crypto bank. This is literally your Lindy protocol. This is the Lindy of all protocols. This is Aave. This is where you deposit and just let that shit sit. Anywho, what do you think will drive up CRV-USD adoption? I think SCRV-USD is next step, and that's literally next step on their dev roadmap. Um, so I think that will help. But you got to understand. Let's go here. Let's go here. Stables overview. We go here and let it load. Oh, here, 172 billion stables. But let's no, that's fine. So there's 154, almost 155 billion dollars worth of Tether and USDC, and then there's 5 bill of DAI, which is fucking deprecated, is USDS now, and then Athena, whatever, and then what is this? BlackRock's 2 point is that First Digital, and here's USDS coming in a bill. I mean, look at actually no. Here's BlackRock's build. So here, look at this. Look at this shit. No, I can't. The potential for CRVUSD. Look at this. Look at this. I don't know. On the whoopee do. And then Frax. No, not USDO. Is that there's another money protocol, and there might be a 367 mil. All right. Everything below that, everything above here, everything in this box, unless I'm mistaken, there's all capital that's flowing into the crypto markets. And that's basically all of the dollars that exist in crypto. Just add that up. One third, 57. That's almost all of it. Maybe there's 2 bill, 3 bill worth of dollars that have been created in this market. Oh my dear Lord, ladies and gentlemen, if I have conviction on anything, is that this bull market is not over until there's a credit bubble in this market. What is a credit bubble? A credit bubble is when there's $100 billion created in these markets. When there's more dollars that have been created in these crypto markets that have come in from outside of these crypto markets. That, my friends, is a bubble. And there's 3%, less 2%, 2% of dollars in these crypto markets have been created in these crypto markets. They have come in from outside of these crypto markets. That is where we are in the market cycle, ladies and gentlemen. Does anyone do VE Aero loans on base? Is anyone aware? Who's loaning against VE Aero? If anything, it's basically zero because it's all USDC. Who's loaning against? Is Moon loan? No, they're not loaning against it. Henry, who's loaning against VE Aero? Because that is a great question that you're asking, and then I'm asking another question as well. All markets, base. Oh yeah, no one. So no one. If so, that's the fact. That's what people need to understand. I mean, great. You could be excited about Aerodrome. I'm excited about Aerodrome. I choose for exposure to Velodrome because of the superchain and superchain 1.0, where Velodrome is going to basically run everything, including Kraken's Inc. superchain deploy. Okay, great. So all of a sudden, Kraken's going to have their own chain. Base has their own chain. Coinbase has their own chain. Everyone's going to get their own chain. Oprah's throwing out chains nowadays. So the point is, um, I got good opinion of Base, but what is it? It's not Base. It's Coinbase. That's cool. That means Aerodrome is a great product. and a great investment. But it's not because of users. It's not like users are trading. It's arbitrage from maybe Coinbase, their centralized platform, and frankly, arbitrage bots that are arbitraging across the super chain and arbitraging across the entire crypto space. Okay? That's where the volume comes from. Because there's literally only $60 million on Moonwell. There's only $60 million here. It's just a drop in the bucket compared to $3.4 billion that are on base. $3.5 billion. So let's go back here and go back to chains and see what also is on base. I want to see how much is in Aave. Probably nothing. Total. Aave V3. I don't know. I would like to see. Is this 60 mil on? I would have to see. I would want to see how many dollars are deposited. Oh, here. There you go. Okay. So there's 60 mil deposited on Moonwell, and there's 127 mil deposited on Aave on base. In the scheme of things, that's nothing. And that's just credit. That's just credit. There's no dollar liabilities printed anywhere. It's not a market. You don't have a market unless you have credit. Credit is what facilitates financial activity, drives incentives, and drives cash flow because credit is what creates yield. It creates the percentage sign. And that's what drives activity. That's what drives financial activity, ladies and gentlemen. Um, okay. So I hope that helps. Decent conversation today. 71890 is where we're at. Look at that candle, 12-month candle. Let's go over to the monthly. Look, when you clean things up, look at the perspective. When you take a step back from all the noise, all that mayhem on social media, look at that chart. What a beautiful chart. And it was just a retest to the time weighted average price on the monthly. Didn't even punch it, not even a wick below the time weighted average price on the monthly. Just a retest, the mean regression. And it's literally sitting at basically all-time high. You close right now and you're at, if you close right now, you are at a monthly, not just a weekly, but a monthly all-time high on Bitcoin. Holy shit. 71,874. Because everyone's overloaded with noise and needs to, you need signal. And that's what I look for. And that's what I look at. I look at things that I guess most people don't, monthly charts, 6-month charts, signal through the noise. You know what signal is? Gold. Gold is signal. Holy shit is that signal. This basically means that don't look at anything else and just sit back and do nothing and just let the market because the market's going to do you well. That's what that chart says. I think ETH might have its Bitcoin 2017 moment during the cycle and go hyper. I think the monetization of EVM fintech could potentially be in un unquantifiable in traditional financial terms, meaning you can have monetization that is extraordinary. Like how does a $30 million business turn into a $30 billion business in 2 years? That would be historic. Historic monetization. So why would it do that? So not speculative, just on price, like token go from 30 mil to 30 bill. That's just 100x, 1,000x, or whatever. Plenty of things do speculative moves, but literally that goes from producing $1 million a year in revenue to 100 mil or $500 million a year in revenue, cash flow at the business level. That's historic shit. So that's what I expect at some point, because folks don't look at crypto as businesses, and that's probably the biggest short-sighted thing I've ever seen. So literally, business is no different than seeing you're driving down the road and it's like a tax accountant or a mortgage broker or a damn bank. There's no difference between these types of products and those types of products. So at some point, these businesses, just like I showed you the Wayback Machine earlier in the stream, where everything, the top 100 in 2021 was a billion plus in market cap, I expect the top 100 to be 10 billion plus in market cap at some point. Everything I always say, I try and frame it in a reasonable way. At some point, right? At some point, the space monetizes and top 100's 10 bill plus. And then in, you know, 8, 12 years, top 100's, 100 bill plus. Why not? We're talking about fintech. We're not talking about S&P 500. We're talking about fintech, banking, global. So yeah, I like the way you think. And that's usually the scale and size that I think is well basket at. I think some serious monetization makes perfect sense to occur. Anywho, as we sit back with gold at 27.87, that's absolutely insane price action. Ladies and gentlemen of the crypto space, Wednesday, October 30th at 1:23 p.m. I appreciate each and every one of you joining me today. 116 people made it to the end of the stream, and for it, you are a little bit more rational. That's a good thing. Good stuff. One more day left in the week on a Friday, one final stream. Enjoy the rest of your week, and I will see you then. Peace.